Welcome to another episode of the Scottish Property Podcast. My name's Nick Ponte. I'm here with Stephen Clark. How you doing, my man?
Good, mate, good. Looking forward to this interview and this chat. Today we've got on Dee Ludlow, haven't we?
Dee Ludlow, I started following him on Instagram. He's got his own podcast as well. I think he's from like Wales originally. He's just moved out to Dubai. He's basically an investor on like loads of different things. So not just property. He's big into the crypto space at the moment. So one of the things that I was thinking would be valuable to listeners is people that are wanting to kind of diversify and not put all their eggs in one basket into property. And especially at the moment, we're a little bit kind of like in a weird state of the economy. And if you've got cash sitting in the bank, then you might want to think, well, I could be doing other things with this as well, just to kind of reduce my kind of risk and exposure to the market. So I thought it was a great chat, Stephen.
No, I loved it, mate. This is something I've been kind of really into for the last probably 4 or 5 years, cryptocurrencies and the stock market, and more so recently the last couple of years, because I've been using a lot of private investor finance to fund my own property deals and give them a return on the money. So I've got my own money to invest into kind of diversified income. So this has been a real interest of mine for a while. And getting Dee's take on it, God, he's a knowledgeable guy, isn't he? He's clued up.
It kind of reminded me a wee bit of the Adam Lawrence interview. You know, we go pretty deep into the economy and he's got some real interesting views as well. He doesn't hold back. What I love about him is he goes off in these rants and you just let him go, man. And he goes and he gives his opinion. And, you know, I pulled him up for something that he said about 6 months ago, because he said that he thought that, you know, property is pretty much going to crash, you know, and he had a real kind of doom and gloom outlook on the whole thing. And he's like, yeah, well, I still think that, you know, which is what I like about him. He didn't try and change his view. He kept his view and he explained why he's got that view, how he thinks things are still going to crash in the next kind of 12 to 24 months. And yeah, we'll just play the interview now with Dee Ludlow. Okay, so welcome to Scottish Property Podcast. We've got Dee Ludlow here. Dee, how are you getting on?
All good, thanks, guys. Pleasure to be here.
Great stuff.
Thanks for joining us, Dee.
Good. So you're actually in Dubai at the moment, right?
Yes.
How the hell you end up out there? Did you go out on holiday and end up getting stuck over lockdown or something?
Well, I've been going back quite a bit, and the plan was always to come here, and then just after Christmas. So I was out here just before Christmas, came back for Christmas, and then when we went into another lockdown, I was just like, I can't go through this again. And I thought there's no better time than now to go out there and give it a go. So I came here and I've been here since.
Cool. Are you planning on coming back to the UK?
Not at the moment. I'll probably come back at some point, but I'm going to try and see how it goes out here for now.
Cool, good stuff. Well, listen, mate, I listen to a lot of your stuff online. You know, Instagram. You've got the 5 a.m. club. We'll talk about that later. You know, you've got a podcast. You've got a lot of content that you release about, you know, general kind of wider investing rather than just property. And we thought it'd be pretty good to do an episode on, you know, what else can you do with your money apart from invest it in property? I mean, I know we will touch on the property stuff because I think you do a bit of that as well. But we'll get into things like, you know, crypto investing, stocks and shares, building up other assets and all the rest of that sort of stuff. So yeah, do you want to just give a quick introduction of like exactly who you are, what you do, you know, how you got into this whole space?
So I've always been interested in business and different assets as soon as I left school, really. I always wanted more. And even in like the summer holidays, I remember in like year 10, me and my friends started like a gardening business and stuff. So I always wanted to go out there and try and get, make my own money, really. So I started looking at the financial markets first, and yeah, it just gave me a different outlook. I started reading, and it just gave me a completely different outlook on money making and exchanging my time for money. So yeah, that's where it all started. And then, I went on a first property seminar when I was about 15.
So what age are you now?
I'm 32 now. So
right away.
I went on that back when there was like no redemption mortgages, credit card deposits, back when it was a bit of the Wild West, to be fair. And then, so I was so young, didn't pull the trigger on anything that young, which I really couldn't really. So I went into business first, and then from there started diversifying into mainly the financial markets, and I started looking at a bit of bullion, and then more recently, obviously crypto. But yeah, property was something that I don't think I started investing in property till probably about 2.5, 3 years ago. So I went quite heavy in the first 12 months, and then yeah, I'm still refinancing projects now.
So see, when you like said you started investing quite young in that, I mean, have you ever had a job, mate, or have you always just been an investor, or what?
No. I did. Yeah, I've had jobs. I've had a lot of the, some of the low paid jobs that I didn't want, So yeah, I was in and out of jobs quite a bit. I did start when I was like 16. I started to learn my CMAP to be a mortgage advisor. My dad was in financial services, but it didn't work out. Didn't follow it through, and then I ended up going in and out of jobs, stuff I didn't really want to do, and yeah, and then I was like, I need to do something for myself. So yeah, went down the business route.
What's bullion? Bullion? You mentioned bullion or bullion. Is that gold? What's that?
Yeah, so like gold, silver. So yeah, so when I started reading Rich Dad Poor Dad, and I started going down the sort of the rabbit hole with like sort of Ray Dalio and all those sort of investors. So I really wanted to diversify. I didn't want to stay in one place. So yeah, I started picking up sort of silver coins and stuff quite early on, and then yeah, went from there really.
You just get a bit of a buzz, like from kind of seeing the value go up and stuff like that. Does something just get hold of you where you got
Yeah.
quite passionate about it?
Well, back then, when I was reading books and stuff, I always thought, the wealthiest in the world, back then, greatest investors was like Warren Buffett, still is, Ray Dalio, those type of investors. So I thought, oh, the way to become wealthy is invest in the financial markets. So that's where I first started researching, and then I later found out that a lot of these guys they are getting wealthy through like the stock market, but predominantly they're buying businesses. So I thought there's other ways to make money, and that if you look at sort of the top 10 or top 5 wealthiest entrepreneurs in the world, they've all got where they are through business, and then they diversify their profits from their business into different asset classes. But yeah, business is sort of what gets you from A to B, and then everything else is sort of is wealth preservation, but you can gain capital growth from those different asset classes as well.
Okay, so you kind of like went through your 20s and you're kind of like dabbling a bit here and there. And then has it been like last sort of 3-4 years that you've become a bit more serious about the whole thing? Like investing?
Yeah, I would say so. So when I started investing in property, it made me think, it's a lot, it's a higher barrier to entry in property. When if you want to go and buy a couple of stocks, whether you got £500 or £50,000, you can decide where you want to put your money. Whereas property, yeah, we can use investors' money, but to get in the game, it costs a lot more money. So it makes you start thinking bigger, not just in property, but in the other assets that I was invested in. So I just sort of ramped it up about 4 years ago and just started really trying to put my money to work. And back then, even like I was really dead set on property. I loved it. I still do. I was like, look, I'm not in this to sort of get like cognitive dissonance towards one thing. I'm in this to put my money to work best for me. So wherever that is, that's where I'm going. And I'm not going to FOMO into anything, but I'll deep dive and research as much as I can into something if that's what's providing the best returns, and that's what it is. And then, but again, you can build. One thing I think that doesn't get covered in property is, they don't talk about property being a business. And if you're going to run a rental portfolio, you are a property investor, but you're running a business, and that's what it is. So I think that focusing on business and where the money works best for you, that's why I diversified even further, because especially with the sort of current circumstances and everything that's been going on the last 2 years, we was coming to an end of a debt cycle anyway. This has been pushed along since 2008, and we was coming to an end of it anyway, and complete monetary reform. And so that made me like think, right, I need to look more now into the macroeconomic side of this and the effects of what's going on, rather than just jump into everything else because everybody's doing it. And, and it's something that I am quite passionate about, is if anybody invested in, say, the stock market after last year's March lows, especially in the tech stocks, everyone would look like an expert. The same as if you invested in Bitcoin back in March lows, you'd look like an expert. So I feel like there's a lot of smoke and mirrors out there at the moment in all of the asset classes. And I do believe pretty much everything out there is in a bubble at the moment, most things. And I think that people get really one-dimensional and look for confirmation bias in whatever asset they're in themselves to try and justify why it's the best. And I think people need to focus on themselves and then put their personal circumstances. It doesn't matter which one you like the best, which one's performing the best, which one are you going to get the best returns out of.
Yeah,
and I think that
look at the numbers and the returns rather than, than what is and who you are. That makes a lot of sense.
Yeah, and I think that we're all out here for ROI, and not just ROI from a monetary point of view, but our time as well. There's, you can get a good ROI, but if it takes you 5 years and there's something sitting over there that's going to give it you in 6 months, then you need to make the decision. And obviously risk tolerance comes in, and your risk management overall comes in. You don't want to be going into something that's really high velocity if that doesn't sit well with your risk appetite. But if something is there, which does, we need to get out of the one-dimensional tunnel vision mindset and think, this isn't just the only thing. And it is quite hard, especially I find in property, because it's something that you do get really passionate about. And it's something that I'm still really passionate about. As much as some people message me and they'll say, are you telling people not to buy property? I'm just like, no, I've never, ever said don't buy property. It's still the best asset, personally, I think, that you can buy. You can, it generates cash flow, and you can benefit from capital appreciation 90% of the time. So to me, it's still the best asset right now to hold, as far as it does provide cash flow and capital growth. But is it gonna do the best for you right now in the current market, even at the all-time high housing market? And that's the question people need to ask themselves. Don't just FOMO into this because everybody looks like they're busy on social media, because everyone's going to post that they're busy.
Absolutely. And this is one of the reasons why we wanted to get you on. The market's so hot right now, and people are becoming motivated buyers, and they're not thinking rationally by looking at the numbers and the return they're getting on their investment. They're looking at, I've set myself a target to reach 20, 30 properties. I'm going to keep buying, even though I shouldn't be fucking buying. I should be putting it into something else. But like you say, they're so tunnel visioned on just achieving that goal and not thinking about the bigger picture. So that's a really, really good point.
Yeah, I think that the social proof that everybody's looking for and trying to keep up with the Joneses is a huge problem. And it does look like everybody's doing well on social media, because we all post, if you're in property, you're trying to attract investors, so you're going to post good things. Obviously people post bad stuff too, but most of the time you're going to come across as a trusted investor, that if you invest with me, I'm going to put your money to work, you're going to get a good return, etc., etc. So everybody is posting that. So the people that are now just coming into the market or into property, they're looking at this and thinking, why aren't I doing what these guys are doing? And my ego took over me when I first got into property. I wanted to buy as many houses as I could, as quick as I could. And that was my mindset. And then when I started buying in city center, and I started realizing, okay, I put more money in deals, but I'm now getting 2, 3, 4 times the cash flow because the deal's bigger, but I'm getting, so I had one deal that was giving me more cash flow from one deal than 3 of my other deals in a not so affluent area. And I was thinking, I did the same work as I would on one of the deals. I'm getting 3 times the cash flow. So then again, I had to reassess my mindset and be like, right, what am I doing? why am I trying to get all these houses just to say, oh, I have all these houses, when the only reason I set out to do this was to get as much cash flow as I could. With, I wanted to obviously get the most out of my money, regardless whether that's one project or 10. And I think property is so easy to let ego get the better of you because everybody else is doing stuff. And there's people out there that's got 2 or 3 deals, which when I say deals, this could be, I don't know, some of these could be like 20-bed HMOs that is making more money than somebody who's got 20 houses. So I think if anything, less tenants the better,
Yeah.
and more cash flow. So
smaller to manage, more return and more return on your time and effort. Like you said, if you get 3 times more from the one deal, it requires you 3 times less amount of effort and work for the same return.
Yeah, exactly. And I think that that is another thing that I think doesn't get mentioned very often when people first come into property. They get told,
a good point. It's a good point, mate. And too many people just want the Instagram pictures of the gold taps and the interior stuff and all that, so they can get the likes and wow, what amazing refurb. But yeah, basically, from what I can get from you, you're looking at it purely from the investment point of view. The hard numbers. Basically, I've heard you talk about getting into kind of social rent as well. So you've just kind of diversified into that market as well, haven't you? Just going down that route.
So I think that's probably right now, from my opinion, the best route to go down. There's a lot of uncertainty at the moment. Even though we're in an all-time high housing market, there's as a landlord, the protection is just becoming less and less, and is leaning more in the tenant's favor week by week. And I can speak this firsthand. I've had issues with tenants over the last 12 months, and I think that it is a big issue. And yeah, from some of the social housing, you may not get as much cash flow as you want, but then there are housing associations and charities out there where you'll still get the same. And to me, to get someone to take properties off you with 5, 10, 15, 20-year leases is a bit of a no-brainer. I'm not in this. This is meant to be. I got told this was passive, and it's not. But I want this to be passive. This is just a sitting investment for me. It is a business, but it's a business that I would like to run itself if I can. And social housing makes that happen for me, rather than me becoming this landlord. I don't want to be turning up to houses. I don't want to be talking to management companies on a day-to-day basis. I don't want to be doing any of that. This is like, if that's what someone wants to do, then fine. If you want to run this as a business, then fine. There's nothing wrong with that. That's your business. But I'm focused on other things. So this just needs to be a passive investment for me. And the more passive I can make it, I'm going to do it.
Yeah, no, like, listen, this is so funny because like Stephen, who's sitting there, like, he's exactly the same as you. So like, I'm quite hands-on landlord, like I'm always taking calls from my tenants. I'm a letting agent as well, right? So, but like Stephen, he's like, fuck that, man. I don't deal with tenants, man. He's the investor like you. Do you know what I mean? The letting agent deal with the shit.
Yeah, and it is. Like,
you did raise a good point there, though, because as much as people believe it's passive, you're still having to deal with a management agent, and they're still bothering you with the phone calls off the issues and not dealing with it. So, like you say, as passive as you can get, the better. Yeah.
Yeah, because like for instance, you give it to a management company, and no matter how good they are, let's say you put a cap on their spending to, even if you put a £500 cap on their spending, right? They're still going to have to call you if this is going to cost more than £500. If there's still stuff going wrong in the properties, they're still going to contact you. And people think that's fine. That's not going to take me long. But sometimes it does. And sometimes if you have problems with tenants...
multiply that by 10, 20, 30, 40, 50 properties. That's a lot of phone calls you're taking every week.
Exactly. And it does, it gives you, it's wear and tear on yourself. Like, I've had issues with tenants over the past 6 months, and there's just one thing after another. And no matter what you do, sometimes if the tenant's hard work, they'll still create new problems. And
I've just tried to do a different strategy, a unique strategy for a property I just bought a few weeks ago. It was a rent to buy, so it was basically like a 7-year. The tenant moved in on a 7-year rental period, like a PRT, normal rental agreement, but they pay a top up to the management agent, who at the end of the 7 years they agree to buy your property for an agreed price. So we've got the valuation done a light refurb on it. We'll agree that percentage increase for 7 years. At the end of it, they buy it. This is the worst thing I've ever had. She just moved in a week ago. She's expecting this brand new refurb house, and I'm like, you're the actual owner. And my eyes, what the thing was meant to entail was, you hand it to the letting agent because they basically see themselves as a homeowner, and everything they spend and do in the property over the years, it'll require no maintenance, no issues, no voids. It'll be a complete passive, like decent cash flow asset. it's had the most rockiest flipping start ever. It's been more time on the phone to this tenant, which is actually a homeowner. It's been painful, but yeah, I get your sentiment completely on trying to make it as passive as possible.
Yeah, and I think we're going to be looking at big changes in the property market. Not just because the fact that it's booming from a lot of people's point of view, but just because it's going to change. But with another thing I like to do is try and think forward and think where we're going. And one thing is, with the future being blockchain technology across every single industry, without a doubt, people need to start thinking, how is this going to affect the property market? Now, what things, especially tech-wise, has affected the property market over the past 20 years? Hardly anything. Things, different things in houses like materials and stuff may have changed a little bit. But as far as an actual change in the property market, we haven't seen a great deal change. It's the same thing over and over again, apart from a change of, say, financial products. But now we're looking at blockchain, we're looking at tokenization within property, we're looking at 3D print construction, we're looking at modular build. So even though a lot of new builds now have modular roofs, what happens when the whole house is modular? And there's nothing wrong with that, but is that going to change the property market, because the cost of that is completely different to building a house at the cost that we have today? And more than likely, house builders are going to take advantage of it for the first five years or so, because they're going to be like, well, I can build a house now for 25% or less than the price we was building for. We're going to sell them for the same price. And the new generation are going to come in and they're not going to care if it's modular build or traditionally built, because you can't tell from looking at it in any way unless someone told you. So someone's parents might look at it and be like, no, I want the traditional house, but new generation aren't going to care. I wouldn't care. There's no difference. You can't tell the difference. And then 3D print construction is a new beast on itself. That's crazy. The way the technology is forming in that field. And then tokenization of property is going to be very beneficial for landlords, but it's going to change things again. So at the moment, one of the main questions is, how do we value anything at the moment? And then, it's sort of the paradox of value. Why is a glass of water so vital for life, worth hardly anything, but then a diamond, as say, no practical use, is so valuable? So it's hard right now to value anything in the current market. Everything is sort of artificially inflated and propped up with, QE and all the other stuff that's happening. So, and the change of the financial system, I know some people are so dead set on thinking this isn't going to happen. I've even spoke to people that think that cash is going to stay. And it's like, it's an argument to say cash was on his way out before all of this anyway, because we were digital anyway. We had cards and stuff before. But the fact that blockchain is going to put everything on a ledger now, that's including your healthcare, your passport, if we have a vaccine passport, your bank, all of this stuff being held in one place at one time, and you can track it all the way from, let's say, supply chain, for instance. You could track, I was watching Seaspiracy the other night. You could track which fisherman caught that fish, where it went through the whole supply chain to the supermarket it got sold in. Whereas at the moment, you would think, well, don't they do that anyway? No, they don't. And they don't do it with a lot of things. Like even from the plasterboard that you buy from, say, I don't know, Travis Perkins or whatever you buy it from, or Robert Price, from where that come from all the way down to the supply chain, unless some of these people make it themselves. So it's going to change everything. And I think that sitting on the fence and waiting, or putting your head in the sand, waiting, thinking, oh, if it happens, I'll do something about it. Well, you can think forward and get involved now. And, but a lot of people don't. A lot of people are just so one-dimensional, and they're like, I'm just going to keep doing what I'm doing.
What do you think the biggest changes that the blockchain will have on the property market then? Where do you see that going?
So blockchain will be the tokenization. So I think that you'll be able to tokenize property. Like, I think most things are going to be tokenized now. Like you can see people are having their own coins and tokens themselves now. So most people will probably have their own economy, especially celebrities. So you'll be able to buy the Kanye West coin or the Elon Musk coin, which you sure already can. So I think everyone will have their own tokenized economy within themselves. So if they do something wrong in the media, then it'll affect the price of their token. With property, so let's say you have a buy to let and the cash flow on it, say £500 a month. you can tokenize your property so people can buy tokens off you. So they're buying cash flow off you. So you can own the underlying asset, but you can sell your cash flow. So you could sell, say, 50% of your cash flow and sell the rest to somebody else. And some people would think, well, what's the point in doing that? Well, you're gaining, you're taking money off people that you can reinvest, and you're only selling partial amounts of your cash flow for a certain amount of time. So it's sort of like a leasehold. So you're leasing your cash flow to somebody else. But what this does is the average person that can't afford to get into property, or they don't think they can afford to get into property because they don't have the knowledge or network, they can still invest in property. And it's different from a REIT. They can still invest in property at a very low barrier to entry. Now, there's a company called Realty in America that's already doing it. It's already happening over there. So this is going to, and I know everything usually happens there first. So it's already happening. So I think tokenization is going to, there's so much more to this. So there's stuff like the metaverse that you can buy land and assets of property and stuff within a virtual reality. And all this sounds crazy now, but mark my words, in the next 5 to 10 years,
How long? I was going to say, how long are we talking here, mate? In your view, how long do you think? Like, we're pretty much here, right? I mean, things like Tesla and these, Elon Musk and all that. I mean, really big companies like adapting this, right, and making it kind of mainstream. And you've talked about, the institutionalized investors as well getting involved in, putting their money into crypto as well.
Well, yeah, I think that this space, like, techs move really fast anyway. I was talking the other day to somebody, and it was a picture of I think it was Steve Jobs, and he was showing people the first iPhone, and I think he scrolled across, like, when you used to you slide across to open the first iPhone. I remember he when he was doing his presentation, he slid across, and the crowd goes crazy, like, wow, they're clapping their hands, like it was amazing. And then he was showing how he logs into the phone and how you can just with your finger scroll to go through your messages, and everyone was going crazy. And when you think this was like way less than 20 years ago, I can't remember when the first iPhone, like, what, 15 years ago, less than that, 12 years ago,
maybe 15, so, 15 years ago, probably. Yeah, I've still got one up in the loft.
So when you think of how fast techs move from then, so back then you need your iPhone, you need your sat nav, you need your MP3 player, you need because it would only or your iPod because it only holds so many songs. You need maps. It'd be loads of different things you'd need to carry in one bag. Now everything's on the phone, and we take it for granted because we're already here. But when you think of all the things that is on your phone, you could basically use your phone as a laptop right now. A lot of people do. So you can run your whole business off your phone. So we're already in exponential growth in tech. Now blockchain has been adopted. I would say is going to fast forward what we've done in the last 12, probably into at least half, if not sooner again. So I think that every global economy is working on a central bank digital currency, which again is going to change the way our financial system works. At the moment, our retail banks are the man in the middle. They're the middleman that offers all this stuff from liquidity lines from central banks, and that's why in 2008 a lot of you've seen a lot of bank failures, a lot of insolvencies, because the central bank did bail a lot of them out, but a lot of them failed. And when the central bank comes forward and they get sort of that control of being able to lend money to you directly, you holding an e-wallet or a bank account directly with the central bank, it changes the whole landscape of the financial system, because people at different parts of their life can be treated differently from an interest rate point of view, from a control point of view, from a credit or social score point of view, everything. It is total control. And it's hard to talk about this without people thinking, oh, you're talking about conspiracy theories. I'm not. This is just what's happening. And people can just go on the Federal Reserve's website, the Bank of England's website, the IMF, the World Economic Forum. They can go on all these websites and download the articles and read them. And this is where we're going. So with the change of the financial system and the rise of blockchain technology coming into every single industry, it's going to change everything. So it could be as early as 5 years, it could take 10 years, but there's a lot happening, a lot faster than people think is happening, because they're so stuck on watching the COVID news. So a lot's going on, but because every day they turn their TV on and we're having updated numbers on cases, they're getting sidetracked from the rise of blockchain. I don't think people realize how fast this is moving.
Yeah, no, I've got to be. It's got to be said, right? I'm guilty myself of even just as little as 6 months to a year ago. I was like, fuck Bitcoin, man. It's just a fad. It's just to like, it's going to disappear overnight. The bubble's going to burst and all the rest of it. But now I'm like, no, wait a minute. Like, I've got money sitting about in the bank here. I can't buy property because everyone's going for crazy. So I'm now thinking to myself, what else can I do with this money, right? And I'm looking at like guys like yourself and your other people on Instagram posting screenshots of their charts and how it's absolutely going mental. And I'm like, I want a little bit of this action. So can you just kind of give us a little bit about, how can people get started in this? If they're starting from scratch, and obviously, with high reward comes high risk. So we got to watch. I mean, you obviously can't give advice, but what's the way that somebody can get started in this?
Firstly, I would do as much research as you can. I'd start off by downloading the Bitcoin white paper. It's 9 pages long, and just reading it, just to give you an outlook on the whole thing. And then I'd start looking at Real Vision's a great place to look. So there's a YouTube channel called Real Vision. A guy called Raoul Powell's interviewing some really good people, and he's interviewing
Real Vision.
Yeah, Real Vision. Yeah, because they're interviewing a lot of institutional investors, and what they're doing is they're giving us retail investors a good outlook on what the institutions are thinking about this space. So they're doing some really good stuff. Raoul Powell is a great guy to listen to. So I would say that's a good start to get your head around why this is here and why it's going to stay. Because I think, like you just mentioned, a lot of people, especially people that got burned in 2017, are like, I'm not investing in this. This is going to go again. It's not going to stay, blah, blah, blah. But the problem is...
Funny touching that, because I bought Ethereum back in 2016. I think I bought it for about 40 or 50 quid a coin. And obviously it peaked in 2017 and it fell off a cliff. So like my grand or whatever I put into it, like it flew, and then it crashed, and it remained low for ages. And I started buying like altcoins, loads of altcoins, but I couldn't keep control and didn't really understand it. It was just one of these things to try and diversify. And I'm kind of kicking myself a little bit now. You're listening to you're going to agree with me, but at the start of the year, I just kind of was thinking about the whole Warren Buffett saying, when everyone's been greedy, be fearful. When everyone's been fearful, be greedy. And it was at the same point when in 2017, I started hearing like complete idiots on social media talking about cryptocurrencies and buying Bitcoin and Ethereum. And I thought I should have sold out when these idiots were going to buy it. And then at the start of this year, I started to see the same thing happening again. I was like, these idiots are starting to talk about every man their dogs. They're talking about crypto, and it started to rise. And I sold my Ethereum at 700 quid a coin in January. And I believe, I've not looked for a few weeks because I'm actually sicking myself look, but I believe it's more than doubled again since then.
Yeah, so I think Ethereum is broke $2,000 now. Bitcoin has hit a new all-time high today, $62,000. And when you think the March lows of Bitcoin it actually, because a lot of people got liquidated on their futures contracts, it actually dipped to like $3,600. But most people would have seen on their exchanges $5,000. But when you think that it was $5,000 basically a year ago, and is 12x'd in the last year. I remember doing a presentation on the 5 a.m. Club talking about Bitcoin when it was sub 10,000. People was waiting for a 5K pullback. Then when it went to 20, they wanted 10K, 30, 20. And it's like, at what stage do people, what stage are you going to believe in it? Because otherwise you're going to keep waiting for that 10K pullback, which may never come. And one of the things I would say for people to really research is the way the market cycle, the halving. People need to really focus on what Bitcoin is, how long the cycle lasts for, to have that, so to make you sleep at night if you do invest. Because when we have these pullbacks, like if it pulled back to 40K tomorrow, that wouldn't bother me, because I understand the cycle and I know where we are in the cycle and where we're going in the cycle. But most retail who haven't took the time to research why Bitcoin is here, why it exists, how Bitcoin and macro has crossed, they'll just be like, they'll feel that the world's ended. because they just listen to their neighbor, because their neighbor or someone down the supermarket is buying it.
Daily Mail or something like that.
So yeah, because they see someone on social media, I need to quickly just FOMO into Bitcoin because everybody's doing it, and they're not really.
I get it, mate. Right? What I'm trying to like understand is, right, I understand property, right? You buy the house, it's there, you can see it, like, you know, you're getting your cash flow, £250 a month, whatever, right? And I'm thinking, right, I want to get into these other investing things, but how do I get a strategy that's going to work for me long term? That, you know, I'm not in it to get rich quick. I want to do long term investing. Is there a way to actually put money into crypto coins or cryptocurrency and like make an income, draw money out, or do you have to leave it in there for 10 years plus? How do you have to get a strategy? How do you get that right in your head?
Yeah. So there's many ways you can do it. If you wanted exposure to cryptocurrency, but you didn't want to invest directly into cryptocurrency, there's a lot of stocks out there that you can invest in on like Hargreaves Lansdown to get some exposure to that world. Like there's one called Riot Blockchain. I posted, I think on the money challenge last, I think it was October. Since then is gone up 2,000%. So I did a challenge, like a 5-day challenge similar to this crypto one I'm doing, and it's been up 2,000%. So you didn't have to invest directly into a crypto exchange. You could have just bought that stock. And there's a lot of stocks like that. But if you wanted to, the best strategy that has played out for everyone is dollar cost averaging in. So there's
dollar cost averaging in. I'll need to look that up.
Yeah. So if you just invested the same amount of money every month, forget the price, just like people would in sort of the S&P 500 or the stock market, the same way. So people that have done that have made a lot of money. Now you can make more if you keep going in and out of projects, or if you trade it, you can make more. But to have like a solid portfolio, if you just dollar cost average in, forget about what everybody else is doing, you'll do okay. But yeah, I just think that people just firstly need to understand the cycle. And I know you mentioned that property, tangible asset, you own it, you get cash flow from it, but everyone that's got mortgages on their properties don't own any of them. Realistically, the bank owns every single one. And yeah, people can be like, well, yeah, but I'm getting the cash flow and I do own it and stuff. My name's on the deeds. Well, yeah, but until there is no mortgage on it, technically you don't own it, right? So the same as like a lot of these stocks, people are buying them like, yeah, I own the stock. Yeah, well, if the company fails, then so does your stock, so does your money. But with, let's say you bought gold or silver coins, right? You own them. Yeah, you have to put them away, but you own them. If you buy Bitcoin, you own it. And if you leave it on the exchange, then you don't really. But if you take it off the exchange, store it on a ledger or in cold storage, you own it. That's your asset. You physically own it. Yeah, you can't see it because it's code, but you own that Bitcoin, same as you own a gold coin. But property, you technically don't until there's no mortgage on it.
Yeah, good point. Good point. And you firmly believe, you believe that there's no chance it can just like basically go to zero. I mean, I know you can't say for sure, but from what I'm hearing you say, is it going to be like almost like a replacement of gold or something like that? Is that how it's going to sort of pan out? So
the thing is, it's going to be in price discovery for a long time. It follows like the cycle quite well, but you know, as far as a store of value, it's hard to say like, oh, this is a store of value right now, it's digital gold. Technically, that's sort of what it is, but for gold doesn't go up every single week. And, you know, would you want to buy, say, you know, not that you should really care, but if you bought a coffee in Bitcoin this week, next week, that coffee could have cost you double, or, you know, so it's like, for now, it's hard to say it's a store of value. Will it replace gold? It's looking like it. And when you think of gold's market cap being 10 trillion and Bitcoin's just going past 1 trillion, the upside's massive if that's what does happen. It looks like that's what's happening when you think of some of the massive institutions out there now putting this on their balance sheet, you know, consistently buying it. Banks like JP Morgan, Morgan Stanley, they're now offering it to their crypto assets, to their high net worth individuals. So it is looking that way. And the reason why I don't think it's going to go to zero is because of that. You know, you got Elon Musk. I don't know if he's still the richest man in the world, but I know like last month he was, but whatever. For him to put that on Tesla's balance sheet, for Michael Saylor to put it on MicroStrategies and a bunch of others now. I'm pretty confident Apple's bought it, but they, I know that Michael Saylor's on a bit of a mission to try and get corporations to buy it without moving the price. So a bunch of these have bought it, and I don't think it's going to go to zero, 100%
And
not.
in the crypto world, when you start investing, was it like, stocks and shares, they'd always advise you to go buy different companies and all that, so you're kind of, diversifying your portfolio. And so would you advise people kind of the same if you're buying into crypto? Should you look at other coins and that rather than just plowing all your money into Bitcoin?
Well, yeah, I think it all depends on the person, what they want out of it. So if they're looking to invest into projects to get gains across the whole board, then yeah, I would look at other projects too. If you just look at the store value and just buy it and leave it there and forget about it, then it'll be Bitcoin. But I think that this is another thing that, a lot of people that just die hard crypto, which, I'm very bullish on crypto and is my favorite asset class right now, is Bitcoin's been the best performing asset over the last 10 years. So, it's hard for anyone to really turn around and say this is better, because technically it's not. But people does need to look at the fact that, everyone is looking to get wealthy, get rich, or whatever you want to call it, or however you want to class rich as. Not every rich person and not every wealthy person owns gold. So if you're looking at Bitcoin as gold, you don't need to own Bitcoin if you're just looking to get wealthy. Now, personally, my opinion is I think people should own it, but not every wealthy person owns gold and those sort of assets. You don't have to own it. There's some really rich people who don't own property. There's some of these people just are rich from business or from whatever it is they do. Whatever they class their business as. So people don't need to FOMO into this.
Yeah, I've got serious FOMO. I was going to say I've got serious FOMO at the moment. And that's the danger, because I have not got a clue what I'm doing with it. So if I say to myself, right, okay, 20 grand, here you go. Fuck.
Yeah. I think it is definitely all down to people's risk appetite. If someone asks me, do I think Bitcoin's going to hit 100K this year? I'm 100% confident this year we'll see $100,000 Bitcoin. Do I think Bitcoin has got potential to go 500,000 to 1 million in years to come? Definitely. And I think that it's hard to look at things from a basic economic point of view of supply and demand at the moment, because it's sort of not playing out across most asset classes. When you come to Bitcoin, there is a fixed amount. So there's only ever going to be 21 million Bitcoins. And so not every millionaire in the world can even own one. So when you look at it from that point of view, do I think that owning even with just one whole Bitcoin in the future is going to be a big deal? I think yes. I think that it's going to be like, wow, well, you own an actual whole Bitcoin, because I think of where this is going to go, because not everyone can get their hands on them. And if you look at something, is it called on-chain metrics? So there's a few companies that do it. You can look at how illiquid Bitcoin is. So especially more and more this year, more Bitcoin's been held off exchanges, which means people are holding it, storing it in cold storage, and they're not moving it around, they're just holding it. So people are holding it more now and not trading it or doing different things with it now more than ever. So there's less and less Bitcoin available to buy.
That was sorry, mate. That's what I was going to ask about, holding it and stuff like that. I mean, can you withdraw? Are you making a living out of this, or are you just reinvesting it all in to, where are you making your living out of this?
So I trade a little bit of crypto. It's not something I'd advise to people to just go straight into doing. So I do trade crypto, but I also buy and sell. I'm in and out of projects as well to increase the value of my portfolio. So different stages of the cycle, different projects. I look at stuff and I'll go in and out of stuff. And then you can draw it down if you want. But one thing I definitely recommend that people do is look at the tax implications, because this is something I think people have completely forgotten about. They're having the time of their life buying and selling crypto, making all this money, and not realizing that there's tax implications when you're doing this. And with the HMRC,
is that why you've moved to Dubai, mate? Is that why you?
And with the HMRC, there's software HMRC Connect, which is an AI technology. I think people it won't happen straight away, but over the next probably 5 years, people are going to be hit with tax bills because of especially capital gains that they've made in this space, especially people that are using a lot of money and putting a lot of money into this. So I think that definitely look at the tax implications. You know, there's apps that can track this called like Coinly, coin tracking. There's a few apps that you can download and track sort of your gains and the tax implications that is happening for you. So I think that that's something that people need to look at, because, you know, this decentralized space is becoming more centralized from the aspect of banks are now involved, tax authorities are now involved, Coinbase are now sharing their data with the HMRC and tax authorities. So people do need to be mindful of what they're doing, because they don't want to be having all this time going out buying their Rolexes, their Gucci bags, and doing all the other stuff, and then thinking, shit, look at this tax bill 3 years down the line from 2021.
When motivated sellers to sell their Bitcoin cheap then.
Exactly. And do you know what's crazy is out here, I'm speaking to somebody now that is working with his clients, all high net worth individuals, and he come to me and was like, do you know anybody selling the Bitcoin? I'm like, why didn't you just go on an exchange and just buy it? And they're like, oh, no, the people want to, I got clients that just want to buy Bitcoin. They'll pay a premium. I'm like, what's the point? Just set an account up and buy it on an exchange. And so you're already seeing people searching for Bitcoin off exchanges. You're already seeing people on exchanges. Like, if, for instance, today we've had an all-time high. I haven't gone on any exchange today, but it wouldn't surprise me if like Binance, Kraken, even Coinbase are struggling. So people can't go on these exchanges. They're struggling to log in because they can't, the amount of traffic going on to these and the buying and selling that's happening at all-time highs, they're struggling to handle the traffic. So it's already, there's a lot going on at the moment in even just Bitcoin. Even forget about all the other stuff that is making it even more scarce as time goes along, because the more people get involved, the less Bitcoin there is. And I think I read an article last month, and it said that if you're selling your Bitcoin now, there's a 90% chance you're selling it to a billionaire. And when you think of that, it's like, do you want to sell your Bitcoin right now? If you've got Bitcoin, are you happy to take profit at 60K, or if you think that it's going to go to 100K? And I think the more people research this space, the more people, the light bulb goes off in their head, and they're like, shit, this is different to what I thought it was. This isn't just 2017 again. This is different now. There's, and I hate saying that when in sort of investing, oh, it's different this time, is the worst thing anyone can say. But it is a lot different, because back then, Ethereum, who was building on Ethereum in 2017 compared to now? You've got Amazon, Google, Apple. You've got some of the biggest companies in the world using Ethereum. You've got some of the biggest companies in the world buying Bitcoin. This wasn't happening then. This was back then. You had people like Ray Dalio saying that, and JP Morgan, oh, this is a scam. Bitcoin's a scam. JP Morgan are now offering crypto. Goldman Sachs, these companies are now entertaining the whole Bitcoin narrative, when back then it was a scam. It was a rat poison. It was all these different things. It's all changed now. They've changed their whole mindset on it.
Yeah, interesting. You see the dynamics changing off it completely the last year. It's changed drastically.
So you're pretty outspoken about, post-pandemic and how all this is going to pan out. You've got some pretty good views about, what's going to happen in the economy and all the rest of it. So let's just kind of spend the last 10 minutes talking about this then. Where do you think that it's all going to pan out in terms of, for property investors and property prices and the economy in the UK, jobs, unemployment? Are people going to be struggling? I think you've got I listened to a podcast last night because I was doing a bit of research about you, and you were pretty gloomy about the whole situation, but that was like probably about 6 months ago that podcast was released. And sort of since then, it's not really kind of transpired that, people are struggling, but I think we've still got quite a lot to go. But Stephen himself was saying his mum, she got made redundant from a job. Stephen, she worked for Debenhams, was it?
Yeah, they closed their stores in Scotland.
Yeah, but then she got a job straight away, didn't she?
I had two applications, 2 job offers, straight away, and it was like you've got the doom and gloom in the media, but you've got this kind of like real life positivity that's I see in front of me. So it's maybe not as bleak as people are going to make out.
What do you think, man? There's been a lot of money put out there. Like, you know, like where's it all going to end up, Dee?
So it literally was this exact time last year I first said, I think that we're going to have an insolvency crisis at some point, and I think that we'll get the market will roll over, not just the housing market, all of it. And I said then between 24 and 36 months, and we're 12 months into it, and my mindset, my whole opinion hasn't changed. There's no way you can print that much money out of nowhere, prop things up, and think they're going to stay there. So at the moment, if you look at let's just look at the biggest companies in the world, and then we'll work our way down. So you've got $100 billion valuation on Airbnb. It's never made a penny profit since it's launched, right? Same as Uber, same as a bunch of the IPOs that's happened this year. So that's showing a lot of the companies no wonder they're all IPOing now, because they're like, we don't even have to make any money and we're just going to get a crazy valuation. All venture capitalists can take their money off the table. Then you've got banks, the amount of money that's being printed now. So people thought that we had an issue in 2008. We printed about $2 trillion. Well, the Federal Reserve did, to print our way out of, over 4 years, out of the 2008 financial crisis. Their deficit is 18 trillion now. So we printed that same amount of money in the space of a couple of months. And the only reason they did that is because they got scared. And for you two being in property, you probably seen as soon as lockdown happened and the property market went on pause, banks showed huge exposure. If you was trying to refinance then, everything changed. The whole criteria changed. I was having valuers go out. The housing market was at an all-time high, and they was down valuing the houses. So I'm like, how do you justify this? Where the house down the road is sold for this amount, but you're down valuing this? Why? Oh, it's because the banks were still overexposed. Now they've been given a lot of money, so they basically got an open credit line with the central bank, like have whatever you want, right? So that's why a lot of people's got a lot of money. Now, if we also look at it from a point of view where, sorry,
That's all right, mate.
I want to answer the door now. So if you look at it from, I think where I was then, that distracted me. So
You're talking about the money that was put out there. Yeah.
So let's say there was no stamp duty incentive. Let's say there was no furlough. There was no bounce back loans. There was no grants. What do you two think would have happened to the housing market, just the housing market?
Oh yeah, like ton of shit, man. Yeah.
And flopped. Yeah.
Yeah. So, and at the same time, if the banks weren't given no money, which that's where the money goes, then the credit facilities would have froze 100%, because they're not going to lend money in the most uncertain time we've ever had in history. They're not going to do it. And so the reason why furlough's been extended, you got to think, right? The UK government, we focus, the first thing that we look at to see if the economy's looking good is our housing market. Whereas in America, they look at their stock market. That's the first thing we look at. Now, with a lot of like the eToro ads and stuff, people are getting more involved in like the stock market and stuff. But the first thing we look at is the housing market. So their main priority was, let's keep the housing market open. And we've seen that everything else was getting locked down and had special treatment. Like, people could continue to build, people could, even now, like, I think, was there a couple of, I'm not as up to date as the news as you will be, but in the UK, but I seen something about that. This is a couple of months ago, like people can go and view houses or whatever, but everyone else got to stay at home, but you can actually go on viewings and stuff. So you could see that they're making this a priority. But it's the same if we look back in 2008. The main reason we had a housing boom from 2009 is because, one, we printed our way out of the financial crisis, and the credit just flowed into all the retail banks and then into the property market. So when all these construction firms had all this loads of credit to build, it was an increase in demand, cheap credit. It led to loads of different mortgage products, and the housing market was on fire. And it's the same thing has happened here. So the banks have been given loads of money, but everyone stayed at home. So there's been no real economic growth at all. There has been none. If you pull up the money velocity chart on the Federal Reserve's website, it's been in a downtrend since 2008. And then when COVID happened, it fell off a cliff, obviously, because if no one's out transacting in the economy, then there's no velocity of money. But at the same time, currency supply has gone crazy. It's been parabolic, literally. And what's funny is that the Federal Reserve has now discontinued their money supply chart. So you can't actually have a look at how much money they're printing anymore. They're going to do a quarterly article or whatever report to see to show you what they've done. So if they didn't get scared because of what's happening, they wouldn't have needed to do all this QE. So when you think of what we printed in 2008 to come out of that compared to what we've done this time, this doesn't go on forever. They kicked the can down the road in 2008. They didn't let everything have a real reset. And even then people were saying, I've lost my entire life savings because of the 2008 financial crisis. And they still printed their way out of it. So they still kicked the can down the road because they bailed banks out. They did all this other stuff. This time, I don't think they're going to bail the retail banks out. So this is a health crisis that I think will lead to a financial crisis. My opinion hasn't changed. And I definitely think that we'll see retail banks failing. So when you see a high street bank, a big one failing, I think that's going to be the first indicator to say that this is where it's going. So,
and then is that going to translate to like a problem with like lending and stuff like that? And is that going to be the issues then if the banks start failing, you say?
Yeah, definitely. I think that the whole lending, the way the whole lending market is structured, I think that's all going to change. And, you have got, people need to understand that the UK residential mortgage market is like almost 2 trillion euros or something like this, the biggest in Europe. So if we struggle to get lending, then it's impossible to keep the housing market up. Without lending, there is no housing market. It doesn't exist. So this is, I think, where people, again, they're reliant on let's just do things the way we've always done. But if there's no credit facilities, there's no UK housing market. And, I think you probably listened to this if you've listened to other podcasts, but UK and Americans keep our money in 3 places: home equity, the stock market, and pensions. And as soon as something happens within the stock market, that, like I mentioned this before, it'll blow up the pension, the corporate debt market, which that's the pension market will go, and then that will end up blowing up the housing market. And it's happened in history over and over again, and it will happen again. If we look at every other country and economy that's created asset bubbles, we've seen how it's ended. Japan had a 30-year recession because they created a huge asset bubble. Now, the difference that we have printed money a lot quicker than they did. They waited a while, but it doesn't change the end outcome. And this is why people think I'm against property, which I'm not at all. I always invest in property. I'm looking out here, and I'm probably not looking in the UK at the moment, but unless the right deal come. But I'm always looking at property because I like it as an asset. But people need to stop being deluded towards one thing. So it's the same as everything. Do I think that Tesla's overvalued? Yes. It's got a P ratio of over 1,500. If you look at Benjamin Graham's way of investing, Warren Buffett, Ray Dalio, they would say that's an overvalued company. But people are still buying it and people are still making money. It could be priced in today for the next 15 years. We don't know. Or are we in a completely new paradigm shift and this is just the way it is? But no, I don't think that. I do think that the stock market and the housing market will definitely roll over. We're 12 months in, so I got another 24 months to see if I'm right. If I'm wrong, I'll put my hands up and say I'm wrong, and I'll still win in my head because I'm like, cool, I own property and I own stocks.
That's what I like about you, though, man. You put your thoughts out there. Too many people just sit on the fence. I can't be doing with that shit, man. You've got to go out there, give your view. Do you know what? Like,
I'm not scared of being wrong. Like, end of the day, if I'm wrong, I'm wrong. I'm looking at, economic indicators from a macro point of view, and this is what it's pointing at.
No, that's why I asked the question.
But you're diversifying your own economy in a sense that you can't really lose. It can go up and go up, or it can go down, or it can go down, but you're still going to maintain different asset classes so that you've protected yourself.
Yeah, so you just have to hedge your bet. So usually in times like this, people rush to deflationary assets. Gold isn't doing the best. I know it was at a pump recently, but gold should be doing better, but it isn't because maybe a lot of gold investors are moving into Bitcoin. But if you're in one asset, let's say you're solely in just property and the property market falls off a cliff, what happens?
You're screwed.
And this is why I don't want to be trapped in that predicament.
Good point. Like, right, we're going to wrap up soon because you'll let you get on with your day. But no, I mean, just like the knowledge that you've given us over the past hour, mate, is incredible. Like, just for people listening to this, if they want to get clued up more about this sort of stuff, like, is there any like resources that you go to? Like you mentioned, like Ray Dalio and stuff like that. If you want to get clued up on this sort of stuff, where can people go? I mean, obviously you've got your thing that we can talk about. Is there other experts that you look to get knowledged up?
So for the crypto stuff, like I said, the best place people can look is probably Real Vision, or there's a guy called Simon Dixon. They break it down from like an investment banker and an institutional point of view. As far as the economic stuff, I usually go to the source. So I'll go like to the Federal Reserve's website to monitor. There's actually, I think, a website called Trading Economics where you can like break down like PMI charts, money velocity charts, money supply charts. So that's why I usually look to measure the economy to see where we are. That's probably the main places. Like there's a bunch of stuff on YouTube, but you have got to be careful what you look at on YouTube because there's. Oh, sorry, Ray Dalio. I think he's got a video called The Economic Machine and How It Works. Cool. I think it's 12. That's really good. That's a really good thing to watch.
Okay. And the 5 a.m. club then? Why is it not if it was the 5 p.m. club, mate, I might join in, but at 5 a.m., I don't know. What's the deal? Tell us a little bit about that.
So it was one of those things, lockdown last year. I just needed to get myself out of my comfort zone. So I contacted a few friends. We jumped on a call at 5 a.m. and then it just snowballed from there because, as you know, people share on social media. And then, I started to spend a lot more time building a community. And then I thought, you know what, I want to monetize this, but I want to do it in a way that people can access like really valuable information from market leaders or, people that specialize in whatever they specialize in for next to nothing. So it's £30 a month. And, we've had property educators on there speaking that charge 20K and they're telling people how to get into property on there for free, and you've got to pay £30 to access it. And it's the same with crypto, stocks, Forex, business. Yeah, we cover everything on there. So I just really wanted to create something that people could get access to really valuable information without forking out 20 grand on a course.
Sounds great, man. You're building the community there and it sounds fantastic. I mean, to be honest with you, mate, I was joking about the 5 a.m. Like I actually, like, you know how you used to, I used to read the books and that. There's one, The Miracle Morning, and then used to see all these people on Instagram and all that, part of the 5 a.m. club. And I was like, what is that all about? There's no way I can do that. And then just in the last, I would say 6 months, I have actually started getting up at 5 a.m. because I've got 3 small kids. I'm married, I've got 3 kids. It's the 2 hours of the day that I am most productive between 5 and 7 a.m. because nobody giving you any distractions. So I've pretty much bought into the 5 a.m. club, mate. So I might see you there, actually. I might join on soon.
Well, I was in the same situation. I'm married with 3 kids and that was the same as me. For me to get more work done. But if people aren't 5 a.m.ers and they don't want to wake up, they can still get access to the information. We record everything and then it goes onto the website. So
nice one. All right. And just shout out your social media handles.
So the 5 a.m. club is Join the 5 a.m. Club UK, and my personal one is DEE_Ludlow. So that's where you can find me.
Guys, I hope you enjoyed that packed interview with Dee Ludlow. He's got so much knowledge and so much knowledge and experience in investing in as a whole, not just property market. So it's good to get his insights, isn't it?
Definitely, 100%. If you could tag Dee, myself, and Stephen in a Instagram screenshot, we'll share it out to our followers. And if you head over on the Scottish Property Podcast Facebook group, we would welcome you on there as a member of our community. And we're always putting on.
The group is almost at 2,000 members, Nick.
Whoa, 2,000, brilliant, excellent. We'll need to throw a wee party when we get to 2,000.
Definitely. There's so much good engagement in the group actually at the moment. People are sharing up their case studies and their deals and asking questions. It's a really, really engaging group.
Yeah, one of the things that we actually, because there's loads of these groups out there, but one of the things we said right at the start was we weren't going to do any kind of recommendations of like tradesmen and stuff like that. And for some of you, that might seem a bit harsh because you think, well, why you've got a Facebook group for not like recommend people and that. But we find that it kind of declutters it. and it kind of makes it concentrate on the actual projects that people are doing and the stuff that people are really interested in. Because if somebody comes on and asks for a plumber in Glasgow and you live in Aberdeen and you've got no interest in investing in Glasgow, then what's the point? So that's the reason, guys.
Content, yeah, absolutely.
Yeah. So if you see your post disappear and you've asked for a recommendation, you know why. But we're just trying to help the community. So yeah, thanks for listening, guys, and we'll see you again next week.
See you next week, guys.